the markets for a minute. I mean, initially there was all this panic that markets were going to tank, and that was quickly reversed. But where do we see things happening, not today, tomorrow, next week, but the next, the foreseeable future? Rana, what do you think?
Well, it's interesting. It wasn't a surprise to me that markets tanked. Markets always tank when there's a new president. Markets were down about 5% in 2008 when Obama was elected. Markets just don't like the uncertainty of a new leader, particularly one that signals a paradigm shift, which Trump clearly does. It's interesting that, the gains mostly came back. I think that U.S. stocks in particular are going to continue to be kind of a pretty house on an ugly block that is the global economy. But I think what is going to happen is any bad event, weak manufacturing figures out of China, a bad jobs report, something happening in Europe politically, is going to exacerbate this feeling of insecurity that investors have before we really know what a Trump presidency is going to look like policy-wise.
Kind of on tenterhooks a little bit. Jeff, what do you think?
You know what's interesting? So we we surveyed Schwab clients just right after the election and said, how do you feel about this? And more than 3/4 of them said, I'm not making any changes. I still feel confident that my portfolio, my asset allocation is going to weather whatever this storm hurls my way. We don't know what Trump's governing will look like. There's a lot of questions. The response was interesting, right? So if I think back to the debt ceiling debacle, another major U.S. shock, took 3 months for stocks to respond and get back to their pre-political event level. With Brexit, it took 3 days. This time it took 3 hours for markets to get back.
I mean, Sean, part of that might just be that it's decided, right? I mean, markets don't like uncertainty. This has been so just up in the air and so just kind of plagued with so many issues for so long, and it's over. Do you think that was part of it? I mean, Carl Icahn said he was going to go buy $1 billion in equities that very night, right?
Oh, there's 2 points, really. One is that a lot of Trump's proposals are actually less punitive to business than those that Clinton were proposing. For example, cutting the corporate tax rate to 15%, which is like 2 points higher than Ireland, would be a radical move that would be very pro-profits and pro-business potentially. Rolling back regulations is another move that could potentially increase profits and benefit business. On the other hand, there's other issues that he's advocating that are not so favorable, especially on the macro level where he doesn't want to rein in entitlements or spending at all. Those would certainly be troublesome, especially from the interest rate point of view going forward. On the other hand, stocks are expensive now. And I think that your point is correct that whenever you have any kind of upheaval or uncertainty and you already have really high PEs and high expectations on earnings and the feeling that interest rates are going to stay low for a very long time, and anything changes when you're at that very high tipping point, you could have a sell-off that's quite large.
Yeah.